Thanks for your company on this 15th day of January. My name is Jessica Remy, a market strategist here with Moomoo. Good to see you. Let's cover the news that you need to know. The focus of the day, it's Bitcoin, by the way, and the key investments that you should be adding perhaps to your watch list. Let's get to the news that you need to know now. So banks, of course, the barometer of the US economy, they're now disappointing the market. And we're seeing huge volumes of sell orders with tech stocks following. And the Mag 7 now down about 1.5% this year. Meanwhile, investors are continuing to rotate into commodities. The market is telling us, yep, materials, they're probably going to have a winning year. The materials sector itself is already up 7% this year. Stocks that we've been talking about, or I've been speaking about a lot of late, are just punching to new highs. Albemarle, the world's biggest lithium stock, is up 25%. Gold, the world's biggest gold company, is up 15% this year. But now, for what is putting downside pressure on the markets, banks and tech stocks. Why is that? Well, these are the only sectors, the only two sectors in the red this year, and it's for a couple of really important reasons that you need to know and consider. So both banks and tech stocks did really well last year, but their profits and valuations are being questioned right now. And this is all because of a couple key reasons. Citi overnight joined JP Morgan in saying Donald Trump's credit card cap of 10% could probably trigger an economic slowdown. So economic slowdown concerns are spilling over into tech stocks as well. But what is also putting pressure on tech stocks is a key US power grid operator has downgraded or dialed back their forecasts for the AI boom. So all in all, this is putting pressure on things and causing tech and the broad market to fall. If we think about some of the biggest losers overnight, sure, if you are looking at market cap, they were some of the big tech names. But if we think about the most volume of orders, we saw Bank of America shares seeing a very large volume of sell orders. Their stock fell almost 4%. This is even though the Bank of America reported far better than expected profits. Wells Fargo also fell by a similar tune, losing about 4%, but that bank reported weaker than expected earnings. But I guess what you need to consider now is the concern, what if? What if big tech stocks, such as those in the NASDAQ 100, also report weaker than expected earnings? Well, this is all while, of course, we've got concerns picking up on the geopolitical tension front. So this basically could suggest if we see disappointing tech stock earnings results, that could signal further downside is here for markets, but we really won't know what happens until we start to see the numbers coming through. You really probably want to wait to see what happens with US tech stocks. Netflix, of course, the first tech stock this season to report, and of course their results are out next week. But all in all, what to take away from this, you really need to wait and see what is going to happen over the next couple of days or maybe even week or so before you can see where momentum is going to push the market either lower or higher from here. But perhaps I would argue a key focus for you right now might be to revisit Bitcoin. Why? Well, Bitcoin is back above 97,500 US dollars. That's where it was before we started recording this. Now, we haven't seen Bitcoin break above 97,000 US dollars since November last year. And there's a couple reasons that Bitcoin is back on the rise, and it should be on traders and long-term investors' radars. So Bitcoin ETFs have seen their largest inflows since the October crypto sell-off. This is basically signaling we could see new institutional participation follow. Now, what happened overnight is we saw a greater or louder talk about the Clarity Act. This is proposed to be a new US law that could be perhaps legislated later this month. Now, if the act is enabled, what it's expected to be is essentially defining Bitcoin and digital assets as securities, just like securities or commodities themselves. And this will basically give the Commodity Futures Trading Commission clear authority over spot markets. Basically, the takeaway here is this will provide a clear framework for crypto and, of course, Bitcoin. But let's remember the current US policy for Bitcoin and why it matters. We do have to remember shortly after Donald Trump was inaugurated earlier in 2025, in March, he made Bitcoin, or his administration made Bitcoin, a key strategic reserve asset in the US, basically enabling the US government to buy and hold Bitcoin on their balance sheet, just like they do gold. Now, the thinking and original idea was actually outlined by Senator Cynthia Lummis, who actually said that she would like to see the US buy Bitcoin over the long term and potentially restrict selling in Bitcoin. And now the aim of that would be to be using the inflation or forced arbitrarily push up in Bitcoin's price, take away some of those gains, use those profits to pay down US government debt. So this is what's was proposed earlier last year, but we have not seen anything come to fruition. We've not seen the US come out and say, hey, we've bought this much Bitcoin, and they have not also said that we're going to restrict selling. So you might really want to see what happens here. Now, if we do see this, ladies and gentlemen, this is going to be a new huge narrative for Bitcoin, and this will probably see bullet coin essentially behave like a bullet train over the long term, because it will be validated as a sovereign US government asset. But right now, what you need to consider is the technical indicators do suggest that you really need to be patient with Bitcoin. Why am I saying that? Well, overnight Bitcoin failed to close at its high of the day. This basically suggesting that the buying that we're seeing is perhaps short term, and we might see some profit taking here, but we really need to wait and see the trend to be Bitcoin's friend. So you need momentum to turn decisively bullish. And for that to happen, you might need to see Bitcoin grind higher over the coming days and weeks. But a sustained level, if you like looking at actual levels, a lot of us do because it's easier to understand. $100,000, obviously the key psychological level for Bitcoin to break above. That might suggest that Bitcoin's dark days are over, but we probably do need to see a clean break and hold above 102 to 105,000 US, and that will probably, I guess, trigger institutional buying from here and usher in higher levels for Bitcoin. But what about the long-term perspective? Well, what if you actually bought Bitcoin, a Bitcoin ETF, and simply took a long-term view, maybe over 5 years? Well, I think this is a really good scenario to play out, because you've got to remember 5 years ago, Bitcoin, January 2021, Bitcoin was just about $29,000. And today it's at 97,000 US dollars. So that's something for you to consider. Where will Bitcoin go in a year or over the long term? Well, lots of institutions and investment banks are saying higher. The consensus is about $130,000 to $200,000 might be the key next level to watch, and then potential long side upside from there if we see institutional adoption really step in. So what are investment banks saying right now? Well, a couple calls. Standard Chartered sees 150,000 by the end of the year. Bernstein says 150K by this year's close, and then 200K by next year. VanEck sees about 130 to 200K. They're not really calling out a clean and clear price target. Pantera, 148,000. ARK Invest, Kathy Ward, probably the most bullish, saying Bitcoin will probably get to $300,000 by 2030. And then the bullish case is for Bitcoin to hit $1 million. 1 million buckaroonies. So where are institutional investors positioning right now? Well, in the US, the easiest way for institutions and also retail investors to buy Bitcoin is obviously via the world's biggest Bitcoin ETF, and that is the iShares Bitcoin Trust, IBIT. We spoke a lot about this over the last couple of years. The second biggest, or the last year or so, the second biggest holder of Bitcoin, obviously Michael Saylor's company called Strategy, formerly known as MicroStrategy. And here's some fun facts. Strategy is actually still the largest corporate holder of Bitcoin. They've got holdings of over just above 500,000 Bitcoins. That means that Strategy still owns more than the US government. Remember, the US government last said that they're holding about 200,000, and they could be holding about 330,000 now. So that's something for you to consider. With that in mind, let's cover the investments to add to your watch list today. The first one is the locally listed IBIT. Now, this listed on the ASX recently, and it's seen the largest amount of flows of any Bitcoin-linked ETF this year. In fact, it's seen about $4 million of inflows of late. That's over the past month. $4 million of inflows just over the past month. All in all, so far this year, it's got $6 million in assets under management, while the ETF with the largest holdings that's tracking the price of Bitcoin and is listed on the ASX is the VanEck BTC ETF. That's got $225 million in assets under management. But it does need to be said, why did I call out IBIT earlier as the world's largest holder of Bitcoin? Well, it actually holds or has $73 billion in assets under management. So that is something to consider, just outstanding. Let's move to some other investments to add to your watch list now. Morgan Stanley, the world's largest investment bank, they report full-year results tonight in the US before the market opens there. It is worthwhile to note, yesterday and today I have been speaking a lot about why you need to watch US banks. They are being pressured a lot as we sit at the open. So overnight, their stock fell 1.1%. Obviously, Morgan Stanley is not the only stock that's seeing pressure. US financials are in the same boat. For more information on that, a link to yesterday's video will be in the comments section. What we need to see is if the trends are reversed to the upside, and if we see Goldman Sachs and BlackRock perhaps deliver better than expected results, we could potentially see the trend reverse here. But it is worthwhile noting, if you are watching Morgan Stanley, looking out over the last year, Morgan Stanley shares have gained 40%. Their outlook has been bullish and still is bullish for the year ahead. So we'll wait and see if they are going to say that that is still the case. Wait and see what happens tonight. But analysts, as we stand, see Morgan Stanley's revenue growing about 9% year on year to just shy of $18 billion US dollars. Now, this would actually mark a decline in growth compared to the same time last year's revenue growth of about 25%. As for adjusted earnings or earnings, what we watch, that's expected to come in at $2.42 per share. Keep in mind, Morgan Stanley has got a pretty strong history of exceeding Wall Street's estimates. In fact, they have done this every single time over the last 2 years, delivering a beat of 6.3% on average. The stock is also rated a buy among analysts, and Barclays recently reiterated the stock as a buy. Morgan Stanley is expected to hit $219, and last night it closed at $181. Mosaic is another stock to add to your investment watch list. This stock is punching the lights out. Overnight, they jumped 5.5%. And in case you don't know what this company does, they don't really make mosaics, but they do of some sorts, mosaics in the ground, I guess you could say. They're the leading fertilizer company in the US. And of course, they tend to do well, funnily enough, when the gas price rises. So what's happening is Mosaic is the 5th best performer in the New York Stock Exchange this year in the materials sector. And its stock is up 15% this year. At $28 though, it's still a far cry from its July high of $38 and also the $79 level that we saw back in 2022. But Morgan Stanley has come out recently saying Mosaic will probably soon be back at $35, saying that will happen in a year. But we could see the fertilizer giant continue to move to new highs if these trends continue. So if we do see gas prices rise and we do see a continuation of ordering for fertilizers, Morgan Stanley, meanwhile, says the stock Mosaic is a hold. Perhaps that's reflecting its jump up in its share price. But most analysts are pretty bullish on the stock, saying it's a buy. Revenue is expected to bump up to around $13 billion, that's US this year. Its price to earnings ratio is about 7%, which suggests perhaps if you do look at price to earnings multiples, this basically suggests it's cheap. So investors are waiting to see if operations continue to improve. There could be perhaps a lot more upside ahead for Mosaic. Thanks for your company. Stay safe. Happy trading.